Jim, welcome to the show. It's great to have you on Seeking Alpha. It's great to talk to you about Jushi.
Great. Thank you, Rena. Thank you for the opportunity.
It's our pleasure. So catch viewers, listeners up on how you got to the cannabis industry and then how you started Jushi.
Great. So I was a hedge fund guy since 1995 and was lucky enough to be very early in that industry. And I was involved on co-founding one that went from 300 to 5.5 billion. And I co-ran it as president, co-portfolio manager. Then I started one called One East Capital Advisors that I still have. It's more of a family-oriented fund now. And in 2014, I decided to move from New York City to Florida, sunny Florida, where it's my background here. And I took kind of a break mentally from the so-called rat race in investing in hedge funds in New York, and had more time to think. And the cannabis industry sort of came to me. People came and said, "Hey, you should be investing in this." And I got involved, I would say, between 2015 and starting of Jushi in 2018. I got involved in about 25 different investment situations. And obviously, it was very fortuitous time. We picked good ones, and it worked very, very well. There were private ones, there were Canadian ones, the public Canadian ones, private Canadian ones, U.S. private and U.S. public, and everything from touching the flower, doing what Jushi does on a state-by-state basis, or the service industry. So it's a great overview of the industry.
And how long did it take you to decide kind of, or the specific project came to you in that way, and so it was kind of streamlined for you how you wanted to get into the cannabis industry?
Well, what I found was I was happy being an investor. I'd always been that, and I had run companies. So my background, I had this background of being a distressed debt investor, and you end up taking over companies. You give up the debt for equity. That's happening, in certain situations like Ianthus right now in the cannabis industry, by the way, and so I had become like a private equity sponsor, taking over companies that became like billion-dollar companies. So I was very used to running companies, including the hedge funds, which were pretty giant. I mean, we had tons of revenues, a lot of employees. We got global. They were startups. So at one point in my investment cycle, I realized the best opportunity was MSOs in the United States. In fact, it was I thought it was by far the best opportunity. The problem I found was there were no good management teams that I could invest in. Now, there were some private ones that were pretty good that we all know became public later on, but those were not available to me. And so I decided to start a company. And that's sort of how it transitioned. And we incubated the company at One East, which is a hedge fund management company, in 2017. John Barrick, who is president of Jushi, worked for me at the hedge fund, and he had worked on all the investments, and so we put together a couple deals and brought them to the table when we started Jushi in early 2018.
It's interesting. That's very much like the development of the cannabis industry is specifically, I mean, not every time, but so many of the good companies are formed by seeing kind of what's out there and either doing it better or buying up who they think is doing it really well. How long did it take for you from starting Jushi? I mean, now you guys are starting to get some really good traction out in the marketplace. Were there times when you were starting where you were wondering if this was the model that you wanted to stick with?
No, I never doubted the philosophy. I've always been one of these people from when I was just a teenager who set my mind to something and picked out good strategic things and then just moved forward to execute on those. Now, I'm not afraid to pivot at all, but the strategy is clear in this industry, right? It's like prohibition. And the people need the product medically, and from an adult use perspective, people enjoy the product and they use it medically in adult use markets as well. They just don't need a prescription. They kind of understand what's good for them. So I understood that there was this large illicit market and this huge market that was opening up to new users like baby boomers who really hadn't used the product in years or ever, who are now using it instead of things like opiates or sleeping pills or things that might speed up your diet, medicines for your migraines or headaches. So you have this whole new market, really caused by a much better product, a tested product, better delivery systems. So I never doubted where we were going. It wasn't easy, and like you said, we have received a fair amount of press. I think there's 7 firms in Canada and the United States covering Jushi now. That wasn't easy, getting that kind of coverage. We're a multi-billion-dollar company in terms of our value. That wasn't easy. And we had to avoid a lot of pitfalls and landmines along the way. And I'm sure, Rena, you know the industry very well since you've been involved in it. But if you look at it, not all the companies have survived. There are companies that were the top of the industry. Now they're going through restructurings. And there are some that were top of the industry that functionally are, dead and kind of don't have any real ability to grow. And so you have fallen top companies, probably about 4 or 5 different top companies that have fallen very, very far, and some are being liquidated. And then you have this whole middle tier, where we would have fallen, or even the lower tier where we would have fallen, where the miss ratio is, probably well over 50%. So when you think about our philosophy of taking a company based upon a simple thought process of, you need a great management. It's a regulated industry, which has its own issues. It's a growth industry which has its own issues. Managing growth is difficult. It has this landmine set up in the industry by being federally illegal, like tough banking, limited access to capital, and a lot of entrepreneurs in the business that might have been in the business for over a decade, which means that they actually were operating in the business when it was not legal. So you have a lot of characters in the business. So you have this broad set of issues that don't present itself in other industries. And then each state is like a different country. You have to operate in that state, a ring fence, iron wall, whatever you want to call it, in that state. So when you think about that, if you're in 10 states, you have 10 different businesses. So from an accounting perspective, from a compliance, a legal perspective, it's all different laws. And then in accounting, you have to consolidate all that. So it's a very management intensive business. I don't think enough people really understood that in the beginning. So we built this platform. Right now, we're running, believe it or not, around $22 million a year in corporate G&A to run Jushi. And we happen to be in 6 states, so we're not even that big. Now, some people have a lot more overhead, but we're very efficient at it. And so to run this business requires a management team. And it's kind of like, chicken and egg. You need the businesses to generate revenues to cover the overhead, but you also need the management team to run the business. So it requires you convincing the markets that you are worthy of their investment to build this business, or you have to go out and get this business and not be able to manage it. So it's a really tough dance, and that's why there's been so much failure. If you compare that to the technology business, and I'm sorry I'm speaking so much, but
No,
if you
go
compare
for it.
the technology business, when you have a great invention, like a social media platform, an app, or some sort of, AI technology, there's a lot of risk in starting the company based upon R&D and actually figuring out something that works. The hit ratio is very, very small because it's effectively an invention, and then you have to find a commercial application for it, 2 different things. But there's a failure rate very high because a lot of inventors don't invent. They fail, or there's something better out there they didn't know about. In cannabis, it's going to win. The market is huge. People love the product, but getting there is very, very difficult. So I think that's what we've done at Jushi, is we've managed to build a business based upon a simple philosophy of being a top, well-managed company.
And to your point about, being a well-managed company, and there's been companies that have not been well-managed, and, the market is seen very much who's swimming naked right now. But I think another point to bring up is, and a lot of times people will equate good management with good backgrounds, like you're speaking from the financial world or wherever it is that, supports corporate governance more than, as you said, the illicit cannabis market. was doing for so many years. But I think also what has happened is there were these kind of, things, companies that looked well managed, let's say, but then were mismanaged, right? People with the good backgrounds were coming in, but then either overspent or overexpanded or spent irresponsibly, or took on crazy package debt, kind of fill in the blank. Do you feel like that, and I'm talking about the people that are coming from kind of a business finance background,
Yeah.
do you feel like that's a notion of greed and kind of coming to the market and just being greedier than you should be? Or do you feel like it's a notion of getting into this business, overestimating how much somebody's business sense is going to be applicable in something that, as you said, is so heavily regulated, is so ever changing? You don't just have to have good business sense, but also be nimble and thoughtful and creative. And so what would you attribute it to?
I think what the market suffered from, which hurt all of us, by the way, but funny enough, the way we are is with our background investing in troubled situations, it actually helped us because we were able to raise money and take advantage of the situation when prices were low because people were kind of messing up, to be honest. So, the good news, the bad news is kind of good news for people like us at Jushi, particularly with my background in the distress sector. Now, so to answer your question, I don't think it necessarily, there's always greed in capitalism, but I think there was the market doesn't get a free pass. I think that the people investing in cannabis were unable to discern what good management teams and bad management teams are. If you go back and look at the reports that were written by the analysts up in Canada 2-3 years ago, all they talked about was the footprint. That's all they talked about. They talked about what states they were in, what the population in those states were, it was all this dream. They never talked about the management team. And it didn't take a genius. It took actually not that sophisticated investor to take a look at these things and say, wow, these people have no experience. This person was a doctor. This person was a salesman. This person has no experience. They didn't do anything. They didn't even go to a good school. So I'm talking about CEOs. And so and amazingly, they were just so caught up in the footprint. And so we stayed away from that, and we told them what we were going to do. We didn't go to Florida. We didn't go to New York because they were pushing everybody. Florida and New York go public, two the biggest states. We said, you know what? Everybody's rushing to buy these are too expensive. We're going to go in Pennsylvania. We're going to go in Virginia, and I'm going to pick up a little something here in Illinois. So we went our own way and looked for value in states that weren't necessarily being marketed. So I think there was the investors, the machine in Canada all have fault with the way they did the industry, but the managers themselves, the CEOs, the investors, sure. I mean, there was a big degree, I don't call it greed as much as I call it promoters. They were promoters, old fashioned. So in the oil and gas industry, which is the industry that I've been involved in earlier in my career, full of promoters, wildcat, they called it wildcat. You go say, hey, I got this great play out here. You drill, and you get all this oil and it's great. It's like, it's like finding money, right? If you find oil, it's like finding money. And the industry was overwrought with promoters, people who would sell all these ideas. So it's totally greed. And on that basis, but the important thing is they're able to promote it. So these people with these fallen companies, if you look at the biggest ones that were the biggest market caps who've fallen the most, they were promoters. So you had a gullible audience who were actually very smart and knew, well, you can't lose in cannabis, but you have to pick the right companies. There's three things to making an investment work. One is the market. If the market goes down 50%, like being invested in cannabis ain't going to be the best thing in the world, right? And then the industry was a slam dunk, so they had that right. The market, goes up and down, so you shouldn't worry too much about that. Then you have to get the company right. So that's where a lot of people were getting it wrong. The good news, though, is right now, I believe, starting about 12 months ago, or not even 12 months ago, I would say 7 or 8 months ago, last summer, they started the market and the people in Bay Street after going in hibernation. A lot of people probably lost their jobs up in Canada, and a lot of companies stopped doing it because they had so many failed stock offerings. You had people who actually thought about the management teams and were a lot more capable of assessing the situation. So I think that's cleaned itself up. and you have this group of 10 or so winners, which we're in. And then there's another, if you look at the stock charts, there's another 30 or 40 companies. Very hard when you dip down into that group.
Yeah, I think that's such a good assessment of the past few years. I mean, it's pretty much when I started this podcast was exactly what you were saying. All the analysts from Canada saying everything that you just went over. I think that's very true. So now we're getting to a place where investors are starting to understand the picture more. Analysts are starting to understand the picture more. Even the media is starting to understand the picture a tiny bit more. But within that, we're seeing crazy volatility where I feel like we should be seeing kind of, you know, as you said, like from last summer, it's been kind of just like a straight trajectory sloping upwards. And now that there's so much more good news in the marketplace, albeit for maybe lesser amount of players, I'm curious why it isn't being more reflected in share prices, in overall, you know, more bullish sentiment. Do you feel like it's technical nature of the market working itself out and, you know, kind of short sellers and all the games that are being played until it happens?
So Rena, that's a good question. I actually think the market has gotten to be pretty good. And so for me, running this company as somebody who's spent a career in, you know, building companies and getting them public and doing things like this, I would say that I'm actually very enthused with how the market is acting right now. The market shouldn't go straight up. So what's happened is the market went too far down. So if you look at Jushi as an example, we raised money from our investors for the first time at $1 a share. And then we kept raising money. We went public at $2.75. This is in US dollars, and which is our ticker symbol JUSHF now. That's a US dollar ticker symbol, JUSHF. And so we went public at 275. Then we went down below $1 in the dark days. Now, we always had enough cash compared to a lot of folks. But having said that, we didn't have any excess cash. And the truth is we needed to raise more money to complete the plan that we had put in the prospectus. Everybody knew that. That was how the industry was formed. We all had these grand plans that required more capital. It's a capital intensive business. So everybody knew that. But when it went down, what happens with all that volatility, like you're speaking with, the cannabis entered a bear market. We were the last deal to go public. We entered the bear market as we went public. And then the equity markets virtually shut down to cannabis while it was still a pretty good neighborhood for most companies in the stock market, including, you know, all these tech stocks that were going public or doing direct listings or whatever it is. So then you come around, you go to COVID. Well, that wasn't good for anybody. And the COVID market took us all the way down. So if you look at it, you know, it was an industry that required capital where the spigot was turned off for like a year. So functionally, we were on the virtual, all became, you know, if you did your analysis, can you pay the debts when they come due? You know, do you have enough liquidity to do that for a year? You know, that's what a gap measurement is, 1 year, a short-term liability. We were all functionally didn't have enough to get past the year, almost all. Then maybe there was one or two that were but they would have had to cut back their capital plans to get there. So it became the survival of the fittest, and very, very difficult, I would say. And that's why only 10 of us or so made it. The 10, I think, best managed companies. I think I'm not surprised by, and when I say 10, I don't know, it could be 11, it could be 9. I'm not sure what that number is, but it was a really good group of companies that pulled through, and we had to do something extraordinary at Jushi, which we'll get to, and I think we did something absolutely extraordinary at the bottom of the market to be one of those companies, but the truth is, it was a functionally distressed industry. So when you look at the stock prices, they had gone too far down. It took the market another year of just saying, the bear going in hibernation, saying, well, this was just a terrible party. I got a big hangover. I lost too much money. I'm going to sleep. I don't know what's going on in this industry. And so the market just went away. There was nobody had, the only super smart, super aggressive investors, kind of like I would have been if I was on the other side of the table at the time, you know, were able to say, you know what, this is kind of what I like to do. I like to go in this and figure out where the mess is. You know, let me just get down deep in there. And so that moment in time, there was very, very little money out there. And so I think that, getting back to your question, what's happened in the market is that was kind of too punitive. And so what's gone on now is we look like we went from $1 a share to, we're trading about 7. Well, we didn't really go from $1 to 7. We went from 275 to $1 for 2.7. So we really went public 275 to 7, which is closer, right? 100% gain over what'll be 2 years in May, right? When we raise that money. So for a growth industry, that's not, terribly bad, but it looks like we were up 600% or something like that, or 700%, but that's not really what happened. So there was a lot of value creation in those 3 years. So I think now it makes sense for the market just to say, these stocks have had a big move, and I kind of like the fact that they're all just trading around a bit, and the values are kind of being, it's not straight up and straight down. We call it in the investment world schoolyard left and schoolyard right. Everybody goes in the same direction. And I like the schoolyard analogy because kids actually aren't the most thoughtful compared to, and so they all move in the same direction very often. So I like, very faddish, think of it as a fad. So now people are discerning, people are taking a break. And I kind of like the trading patterns of the stock. And I think it's actually quite positive for the industry.
So you think it's kind of shaking out to a more realistic valuation?
Yeah, and I that's not to say the stocks won't double in the next year. I don't know. That's not to say it won't be up 50% or down 30% or something like that. But I think there's a ton of positive things in the industry which will drive values much higher over a period of time. But it could be a longer term period of time. But as a long term investor and as an owner of this business and manager of this business, I think that it's a great time to be involved.
And in terms of like the MSO, you talked about being bullish on the whole MSO picture. Would you say that it's mostly what you see it as the ability to scale and the ability to grow within that scaling?
Yeah, I think that's right. I think so. When you look at this industry, okay, let's not forget the regulatory. Okay, the regulators it's highly regulated industry. There's not, and there will be mistakes made by all companies. There'll be somebody in your one store someplace, or maybe several times a year, that does something. You have to do it, you have to report it, and it just happens that way in a regulated business. If you look at Wall Street, there's always things. It's a highly regulated business where a broker does something or a banker does something. Doesn't mean the whole institution's bad. So you have to really minimize that and manage it. So when you see that as an exception, you do it and you report it and you self-report. You do all these things. So that's a hard structure. So you have to manage in a highly regulated, fast-moving business, multiple states. Then on top of that, you have to grow your product. Then you take the product, you dry it, you cure it, and then you manufacture it or you sell it as a dry cured product, right? And that's about 50-50. So there's like two businesses right there in a highly regulated business. Well, on top of that, then you're running a retail network, right? And in part of running a retail network, you need to run an online business and put a great website and menu, which was something we happen to be very good at. And so it's like running 5 or 6 businesses in one. Now, if you think about an online center like Amazon, who's gotten into the physical business but much bigger on the online business, that's one business. But when you look at a CVS, that's a retail business. But we do the whole thing. The only comparable really is in the oil business, where you find oil, you drill for oil, and then you sell it through gas stations. It's fully integrated. Almost no business is like that. So getting back to your question, managing that growth is very, very difficult. And that's what I think the market has not had right. It's very, very hard. So it's I think managing the growth, managing the change, and just getting all that stuff right is very hard. And then you put on top of that what you're really supposed to be doing, if you have the capability to be doing, and I don't think there's many of us that do at this point, you should be acquiring companies and having a national network. There's lots of reasons to do that. You have a bigger market cap, a more liquid stock. You have brands that you can distribute throughout the country, and you could amortize the value. Doing brand architecture is quite expensive. It involves the website, and it involves different websites for each different information, different content for each product. And you test your products. It's very data driven. You don't just say, okay, I'm going to call this product Rena, Rena's Finest, and I'm just going to do that. And that's not what you do. You actually test the name. We have we have an edible called Tasteology, where we must have tested it against different things a dozen times before we decided on that name. And then we tested the look of the cans themselves that they go into, the little tin cans, and then the artwork on that can. So that's a lot of time, a lot of money. And you want to amortize that across the country. So there's tons of reasons to be national and do acquisitions, but it's very hard on top of running your business. And I think that's what, there's very few companies in a position to do that.
It's interesting. I'm a big basketball fan. I talk about this sometimes on the podcast. And one of my favorite players, Steph Curry, he talks about how in practice, he wears weights on all of, on his arms, on his legs, and he plays with a heavier basketball. And then when he's in the game, every shot is much easier for him because it's much lighter. And it seems like for cannabis companies that are exactly what you're describing, a totally onerous operation to run. And then when we talk about kind of the banking opening up and the safe banking opening up and taking away some of those more draconian regulations like 280E or the ways that you guys have to run a corporation because it's federally illegal, interstate commerce, once those things I think start to open up, it's kind of even crazier how much growth there's going to be. I guess my question is not just saying how great that's going to be, but my question is, where do you see it going and how quickly do you think that that's going to open up? Because even when the laws get written, they're still not going to be implemented. So how far away do you think we are from that, and how much time do you spend thinking about that?
Well, I love your analogy, and get me back on track if I get off track. But the Steph Curry, I've heard him say that before, or I've seen it on a video, and I just want to complete that analogy. We wear the weights every day in the game. So
exactly.
It's a federal legality. I think that's your point. The weights are on the cannabis management team, which is why there's so many failures, which is why it's such a difficult environment as an investor. And so in terms of the regulatory change, none of that's really in our control. But if it's more in our control, as people who can lobby, our federal system and state by state system is built on people, looking after the self-interest and industries and employees, unionizing industries, coming together, trying to get rules written, and people who don't want it for whatever reason coming in and lobbying, and you have all these different folks lobbying. So in the state by state areas, the industry, has set up good examples. I think a great example is the state of Illinois, where there was a great adult use law put in place that included money that went to social equity for them to open up their businesses, and allowed lots of room to run for social equity, a reasonable cap on the number of dispensaries, not too low, like 3 that you see in some states, maybe not too high, 10 to 20 is probably the right number. And they came in at 10. And so I think that's so we have these examples, in Illinois that have worked really well. We have a medical example in Florida and Pennsylvania that have worked really, really well. And they have to transition to adult use. Both those states, I think, are in the process of doing that. So for us, it's a matter of just educating the folks who need to be educated. And it's remarkable, that just doesn't happen. I mean, they're just not like trying to figure out the cannabis industry. They have so many things they're doing. They're really focused right now on COVID, but in most states, there's a lot of people who really want this to happen. They want a good social equity component to it. And so I think, and we as an industry need to do a good job of just educating everybody, really what it comes down to, on the benefits of the industry and how it should work, and maybe the Illinois example or some other examples. Okay, so the state by state stuff for Jushi will be really important, because we have Pennsylvania, which, New Jersey just went to adult use. So it'll take about, 6 months to 12 months to implement, maybe a little bit more. But that's a huge border with Pennsylvania. Pennsylvania wants to do it anyway. The governor has gone around, the deputy governor has gone around and surveyed every county. I think there's 69 counties. They came back widely in support. So they want to do it for their own reasons. Then they have this neighboring state doing it, which means their residents, when they go spend their money and pay taxes in New Jersey, so they'd like to probably do it a little bit quicker. And you have a bipartisan legislature, and we're finding that, people, on both sides of the aisle think it's a good thing for their citizens and their tax revenue. And then Virginia, they've moved the fastest I've ever seen, and we happen to have, I think, one of the best licenses in the country in what we have in Northern Virginia, and they have introduced flower, which in the medical market is half your revenues, and they introduced that as quick as I've seen it being introduced. We just started the program in the fourth quarter of 2020, and they've already introduced flower, which is coming into play probably the third quarter of this year, and that just passed a few weeks ago. That's one of the reasons why Jushi's been a popular stock, is people are probably the best, most concentrated play on both of those states, and then Florida, when we're not in, they'll go through a voting process in 2022 or 2024, and so there all these states have these different things which are positive for us in the industry. So, and then on the federal side, so that's separate, and that's a positive thing. I think that the horses, so to speak, are out of the barn, and they're not going back into the barn. They're enjoying the fresh air and sunshine, and it ain't going back, right? Nobody's, so that's done. And then the federal side is moving very, very, very slow, and slower than I think. All the stock promoters. I mean, there were people running companies when they went public saying that we were going to be federally legal like in 2019. I just thought that was the biggest lie that I ever heard, because there was no way that was going to happen. And if you had any sense of what was in front of you, there was no way that was going to happen. Maybe like a 3% chance or a 7% chance, but not a 25% chance. And so, but now the federal side, which is very hard to predict, they have a lot of things they're doing that the country needs, and how this fits into their legislative agenda, we don't know. We believe that the banking thing seems pretty good. Will that include 280E reform, and will it include, which I think it needs to, will it include the ability for us to list our stocks on the exchange in the US, so we don't have this whole Canadian US thing going on for companies that are domiciled here. So I think there's a lot of things going on that could be positive in that. So we don't know what that's going to look like. The devil's in the detail. And then there's states' rights, which I think is the most likely outcome, for a more far-reaching legislation. And that would come later, I think. There's a chance they come together, and I look at and that could be next year, or maybe after the next election. Who knows? But or it could all happen very quick. We don't know. I look at when I first started in this industry, I used to tell people, look what happened in the gay community with gay marriage. Like, you had this country split between states that allowed it and states that didn't, and then all of a sudden, I went to a marriage with two men who were married. The week that the Supreme Court allowed, made it federally legal. Now that it was in New York, so it didn't matter for them. They had their wedding set up, but it was a huge celebration at the reception because it was and it just happened. It surprised everybody. It was unbelievable. That's how this country works. You just don't know how it's going to work at that federal level.
Yeah, totally. And I think your point is really true about the states that have gone online. I mean, I think Jushi was extremely well positioned. And what do they say? You have to be smart to be lucky. So I think that probably worked so well in your favor. But again, it has to do with how you are building the base. The thing I wanted to follow up on is, in terms of the states opening up and the issue of federal legality. Pennsylvania is a state that comes to mind where there's talk from the politicians about treating cannabis like alcohol, and government getting involved in terms of taking some profits, it being more government run. Do you see that as a possibility? It seems to me like that's not a reasonable possibility.
I don't think that's going to happen. I think the term is you don't want to know how the sausage is made. I don't eat sausage anymore. I did when I was younger, but I don't like the way sausage is made. And I think the political process for people like me, who haven't really been involved into it to a great degree. Now, we have people in our company who are charged with helping us do this, but I have never been involved in it, and that whole process is foreign to me, to be quite frank. But because there's so many, go back to the Illinois example, and maybe the Massachusetts example, and there's so many examples of how it's been done that are good examples. Arizona now, so I think what you see is there's just this trend. The trend is just there. Like, why are you going to be so different? You know, why? And do the alcohol distribution companies want a piece of the action? Absolutely. You know, and will they be involved in lobbying for themselves? Absolutely. Will it go in that direction? I don't think so. I don't think it makes sense. That's not what the people want. That's because at the end of the day, the legislators and the governor ends up doing what they think the people want. And what the people want is to go to a store like a CVS for their products and have more control. They don't want to have to go to some, statewide thing. And so that's a legacy, I think, that exists because it's there and they're lobbying and they've kept it there because it benefits them. But I don't think the people of Pennsylvania want that.
And as we see the states open up more and more, what's your feeling on the viability of the MSO model, or these companies growing as you guys grow and as you scale and as you have a bigger presence across the states, and then it starts to really open up? Do you see Jushi as, kind of keeping on its rise to the top of the cannabis picture, or do you see an acquisition happening, or is that something that you don't really think about because you're taking it kind of step by step?
So yeah, I think the MSO model, people told me when I first got in the industry, wow, you're so late. There's already 6 companies, and so they're going to dominate. It turns out that, I don't know, I think 3 of them are gone, and pretty much from the top, tier, and some of them are liquidating, and so, and I always said, why 6 or 5? There could be a dozen. This is, you're limited how many licenses you can have in a state. So I think you're going to have a good dozen or more of these MSOs that exist on a national scale. So it's, which is unusual, but in the growth part of an industry, if you go back in your history books and look at the car industry back in the early 19th century to mid 19th century, there were hundreds and hundreds of car companies. We think all these EV companies are so, novel. By all these EV companies, it's nothing compared to what happened just in the United States. And this was going on in Europe too, and probably in Asia. Where you had car companies, hundreds of them, and then they consolidated over time. So as laws changed and things happened and economic circumstances changed, as industries mature, they consolidate. So I think you're going to have a lot of MSOs, and I think we'll be one of them. And I think it's harder than people think. So I think there's going to be more people who stub their toes. I think there's very few companies who know how to acquire businesses. We will definitely be acquiring businesses. We have $180 million or so of cash on our balance sheet. We have about 60 of that earmarked for growth opportunities within our portfolio, building out stores, building out the grower processors, acquiring more land around some of our grower processors, things like that. Ultimately, we'll be able to finance some of that with leases and debt, so we'll get some of that back. But the reality is we have about $120 million, which we're focused on for acquisitions. And a typical acquisition looks part cash, part seller notes, and part equity, because we prefer not to give out too much of our equity because we're bullish on it. So. And so that's how it all that's how it works. And if you look at Jushi now, we have this big Pennsylvania footprint. We have a big, and we were very early in Pennsylvania. That's how we have 18 different retail location licenses for 18. I think 11 are open right now, which is tied for number 1 in the state. And then we have this Illinois footprint and Virginia. Virginia is very unique. Everybody can own Virginia. There's only 4 operational licenses. But Pennsylvania, if you look at the big companies, they've all gone in, because it's a great state. Now, a lot of them came in late and they're putting together blocks of things. And but I think the days of Jushi being an acquisition target are probably, past us, because there's too much overlap. I would be totally open to that. It's all about the shareholders. If we sold to a well-managed company, fantastic. If they wanted me to stay on, fantastic. If they didn't, fantastic. It all depends upon what happens for our share price. So I think we will be a consolidator most likely, and we will be adding on the platform. Ultimately, that's the better play for Jushi shareholders, I believe, because I think we I think we are probably the top in the industry at acquiring companies, and I don't say that lightly. I'm not really a braggart, which is why I'm not good at investor relations. We have a great investor relations team, but I don't like to say things like that. And basically the reason why that is we have this heritage of really being very, very data driven. And we do that in our business, the way we analyze. I mentioned how we analyze brands, and we do all the testing, and we look on, we get headsets data, Jane Technologies data, and it's a lot of it's anonymous data from people who, give it to them so we all can understand the data, which is very common in any industry. AC Nielsen does that for food stores, and IMS does it for pharmaceutical stores. So the industry, we're doing that too. And so we understand our consumers and what the consumer behavior. So we do it there. But when we do acquisitions, I had a comment from a senior person in our business that they've never seen the kind of diligence and memos that we do. And they're very, very experienced business people. So we really, really dig deep. We get comments from sellers about us being the most professional group they've ever dealt with. And in these deals, there's always issues that come up with. So I actually think that's very hard. And knowing what I know as an investor, again, when you go below that top number of companies, and a couple of those companies have stubbed their toe real hard on acquisitions and don't have a strong history of acquisitions. And if you look at them, you can figure that out. But then if you go to that next 20 below, like, I would be very, very careful investing in them if they're doing acquisitions, because many of them have no capabilities. I mean, giving them money to go out and buy stuff is like, giving candy to a baby. You just don't want to do that. So I think that there's very few of us in that position. So being a company in that position that I think is one of the best, clearly one of the best, maybe the best at doing this, and we've had to do it, by the way. Some of these great big companies, the biggest market cap companies, they were great at winning deals, winning licenses. Right. They were there 6 or 7 years before us. They created enormous shareholder value, winning licenses. We didn't have that opportunity because we were what we called at Harvard Business School. We were a fast follower. There's the innovator, and then there's a fast follower. I would have liked to have been the innovator. It would have been, better for our shareholders. And I'm the largest shareholder, but that wasn't the case. I was a little more cautious. The cannabis industry in 2014, I didn't even think of it, or 12 or whatever, when these people got involved. If you got involved in 14, you were thinking about it in 12, right? And so I do believe that this is a skill where Jushi is one of the companies that has the most upside from acquisitions, because we have a smaller footprint and this capability in-house. So it's a super exciting position that we're in. And we have all this cash. I get calls from, big shareholders and others once in a while saying, hey, when you're going to, we don't feel the pressure. We got plenty of things we're doing. And, if you look at what we've done in the last 6 months, we had like about a 2/3 interest in our Virginia license. We consolidated that. We own 100% before they added flower, before they have this adult use legislation, which is bringing in 2024. Do you know how great a trade that was for us to buy that? It was fantastic. So we did that. We also are in the position of acquiring more land around our facility in Virginia, so we could have the capability to have about 200,000 square feet or so for adult use. It's not something you would need in the medical market. And then in Pennsylvania, we've acquired the property around our grower processor. So if that goes adult use, we can expand that to 250,000 square feet or higher. I mean, we got the capability of 350,000 square feet. It's almost limitless how big we can get there. And and we picked that asset up, by the way, for $16.5 million of cash and 17 million of debt. So, I mean, we have the capability to take it to this huge number. So, and it was a pretty good facility with 88,000 square feet. It needed to be turned around, poorly run, but it was, the bones of it weren't too bad. So when we look at that, we've been doing tremendous things for our shareholders. Now, have we done a big splashy acquisition? We're involved in looking at a bunch of those things, but they have to fit in. We look for the culture at this juncture. We can't do too many turnarounds. It's not like you can turn around every company at the same time in every state. That's just like hubris, right? That's just like, okay, you're just gonna screw up. We don't have that kind of depth. We have a lot of depth, but nobody has that kind of depth. Not even the biggest have that kind of depth. So we want to buy some well-run businesses and we want to take some things from them as well, some of their best attributes. Maybe it's their chocolate bars, maybe it's they have fantastic gummies, I don't know, but we want to pick up little nuggets. Maybe it's they have a couple of great cultivators and we can move one to another state that requires a turnaround, right? So there's all kinds of things we can pick up in these deals, and so we want them at good values. So so we're finding like a lot of great opportunities to do that. But those kind of deals, you want shared values. You don't want to acquire something it's really well run where you're paying for this cash flow stream and then you have to replace everybody because you're all not copacetic. So these are complex things. There's plenty of targets out there. There's very few companies that combine. If you look at the top 3 companies in the industry, they're like off the table in most states. They can't buy. I think Curaleaf, I mean, I'm sure Boris doesn't mind me giving up some free press, but I think Curaleaf, they're done. I mean, there's pretty much nothing they can acquire. And by the way, they probably have the most capability to acquire because they are the biggest market cap. They're done. Now, if you go down from there and just look at those companies, you could just go, oh yeah, they're done pretty much except for here and here. And then you look at the next one down, oh yeah, they're done except for here, here, maybe here. And then we're Jushi, we have like a dozen places we can go, and we're good at it. So I think it's super exciting time. So if you look at let me talk a little bit about Jushi's numbers, but if you look at our valuation and you look at our multiples, now we haven't shared 2022 yet, but we've shared 2021 between $205 to $255 million of revenue guidance. And I think, we've been on track beating our beating our quarters for the last few quarters. So the model has proved to be somewhat conservative. And we're not trying to be super conservative. We're just trying to get it right, And so, but on top of that, we have, and which is by the highest growth rate in the industry over the past, 12 months, 18 months, by far. I mean, we exited 2019, with annualized. So if you took the fourth quarter annualized, it was about 23, 25 million or something in revenue. Okay, for the year. So you annualize the fourth quarter, so multiply that times 4, you get to about 23, 25 million for the year. We're run rating now about 150. I think that's what's known in the public more or less. And we've already provided guidance, so I mean it all fits in. But that's growing. That rate of growth, 25 to 150 in a little over 12 months. I mean that's kind of ridiculous. And so we have that in the business because Pennsylvania, well, we're rolling out, we have 17 stores now, and people should check our website because I can't keep track of it. We open up new ones all the time, and my job isn't really investor relations. And we're opening this year about 12 stores. I mean, that's just tremendous. And we have this huge growth processor in Pennsylvania we're turning around and adding to, which we should have more capacity on that in the 3rd or 4th quarter of this year. And then in Virginia, we started a facility that didn't exist, it's just doing its first harvest as we speak. It's curing now and drying the first harvest. So we have all this growth embedded in the company in great markets. And our Illinois stores are some of the industry's best across the whole country. The 2 that are in Sauget, which are essentially East St. Louis across the bridge from St. Louis in Illinois. They're adult use, and they're just, one of them I think is one of the best dispensaries after Planet 13, and it's in a nightclub district, which is why you would spend so much money on it. Like Planet 13, I would say, is quite in a nightclub district, and just off the strip in Vegas. But we have this tremendous dispensary which we just opened up in December that has a trajectory on it that's amazing. So we have all this embedded growth. And then on top of that, I believe we'll be able to do acquisitions that the market, when we do it, will like when we announce them. And I believe we will have a series of those, and nothing too big, that's going to be like, game changing on the company, meaning, it's unlikely we require an MSO or anything like that, but it's a one state, maybe even one dispensary. So we're willing to do the hard work. A lot of these big companies now, they won't acquire one dispensary. They're not set up to do it anymore. They just want scale when they do an acquisition. They want to get 100 million of revenue or whatever each time, or the ability to get to 100 million of revenue. We'll pick up one little one, another one, and we have a team set up to do that. So we'll do the hard work on the small stuff, and then the big stuff will come when we see the deals and the shared values.
I think exactly what you're saying is proven out also by the fact that most companies are not issuing guidance and are not coming out with, hard and fast plans or numbers. And a lot of promise. And I think also a lot of investors are expecting some kind of crazy deal to be announced without realizing the problem with limited license states and the other factors that you mentioned. So do you feel like it's just a matter of kind of where we started from, which is good management? Is that what leads you to be able to issue guidance when most of the sector is not?
Yeah, I mean, I think we were leaders in issuing guidance, quite frankly, for a small company. I think it is good management, and I'll speak to that a little bit. I'll put some meat on the bones of that question. I think our model. So when we do deals, we look at other people's models, and before we decide to go the state by state approach of just taking this platform we have, this management platform, corporate G&A like a $22 million, and now if we add EBITDA on that, it's all accretive below that. We have to add maybe a couple accounting professionals, maybe some more compliance to manage that asset, but we don't have to bring on a new CFO, we don't have to bring on a new legal department. We have all that. It scales. It just scales. It's what they call in business school operating leverage, meaning that it's a fixed cost. You put that on, you don't have to necessarily increase it very much. So we've seen a lot. We've seen MSOs. We thought about trying to put it together with another one and get there quicker. It's extremely unlikely that's going to happen, by the way. That's why I can speak about it. So we've seen these models, both from these MSOs and both from, these state by state operations. We have like the best model by far, which should actually be logical. I mean, we are Wall Street people. That's what you do when you go to Wall Street. You learn how to build Excel spreadsheets, and you learn how to model businesses and value businesses. So that shouldn't surprise people. We have a group, that same group is now split into two, and one of it's focused internally on understanding the costs and understanding KPIs in the grower processors. We take that data, that technology, that technique, and we put it into our models that model acquisition targets in our own business. So we have a very, very detailed, I don't want to throw out the number of pages, but if it's less than 50 or 60 pages, I'd be surprised, because I don't really know. I'm not in there like looking at the balance of the model at this point. John Barrick runs that group and that model. He's a president. That's how high level that is. So we've been able to understand our cash flows, which is why we were never, going to run out of cash, is because we have a model that gives us month by month where we stand. And we were operating like we didn't have enough cash to finish the job, because we didn't. And so like we had this model built for a couple of years, so we have experience with the model. So yeah, we have a high degree of confidence. Now we will be surprised on the upside and downside over time. Stuff happens like COVID. I mean, awful. I mean, who thought that was possible? Now, it was downside in the beginning, but then it's turned into upside, because I think people are probably using the more product because they're sitting at home. And then maybe when COVID comes off, that'll be like, oh, well, maybe that's a little bit lower than we thought. Who knows, but we have so much growth, it doesn't matter, because we're opening 12 stores and what I told you about the grower processors. So that's a huge, advantage that we have. Now, but embedded in that initial group that we split into two, what is called financial planning and analysis, that runs this model and gets into the bowels of the company to do the data-driven stuff that allows us to understand our KPIs and manage the business from a very quantitative perspective. On the other side of that is the business development group, which is run by Oliver Bleckner. That group is our M&A group. So we have like a private equity group that has multiple people in it that have been on Wall Street and hedge funds and private equity firms. And so we have like a private equity firm built into Jushi. And these are top quality people who could work for investment banks or work for a private equity firm or a distressed debt fund or whatever it is. So that's a great group, and they're super data driven. And they kind of feed, those two groups were one, and they know each other and they feed on each other in sort of going back and forth with the education process. And then, our CFO is completely separate. Kim Bombach has run 6 different startups. She's tremendous. She's a force. I always say, if Kim and I took the standardized test, like the SATs or the GMATs, those wonderful tests that we all enjoyed so much, she'd beat me every day of the week, because she's super smart. So I have full confidence in my CFO and what I just told you about being able to pull in all these different, states and consolidate them. And then I have a couple of lawyers who run the legal side, Toby Lefkowitz and Matt Leith, regulatory, and then the other is really securities, litigation, and employee stuff. So we separate the two. Matt does a regulatory. Tremendous, with a big group underneath them that they built. We hired the top people first in each case, and then they built their group. In human resources, we have Nicole Upshaw. She was about to get moved up to the highest levels, was really at the highest levels at a private company called Racetrack. They built some of the most tremendous gas stations. It's kind of like Wawa if you're in Pennsylvania, or Sheetz if you're in Pennsylvania. I'm there a lot, so I happen to know those gas stations. Wawa's coming to Florida. Racetrack. These are the newfangled ones where they have like 12 different, places where you can park your car and fill it up, and maybe 50 parking spots. They have great sandwiches, some healthy food, everything you want, a lot of room, so it's COVID friendly. You're not jammed into a small store. So you'll always go to those if you have a choice. And so she has this, that's a tremendous background for retail. Most of our employees are retail. So she's fantastic. She came on first and she's built the group underneath her. She was our first human resource employee. So in each case, we hired these top people who roll up their sleeves, and we didn't hire anybody who didn't roll up their sleeves. So if you needed 20 people to run your accounting department on day one, you weren't considered. Kim had run 6 startups. She could do it. So we didn't want a conductor. We didn't want somebody to sort of we wanted the people playing the violin. And so this is what we built in this management team, and we run with a ton of energy, and it's super efficient. I'm at the top. In a hedge fund, you have nothing more flat than a hedge fund industry in terms of how it's managed. Okay, so I'll explain that to you. And you can go look at the history of the hedge fund business. A lot of them shut down when the top people leave. And I'm not saying I'm so great or whatever. I'm not a braggart. But what I'm saying is there's no bureaucracy, right? Because you have this very flat organization. Almost all the people report to me, and I make the decisions, and I have a tremendous amount of information coming my way. And now it's been a tremendous amount of work getting there, but I have a tremendous amount of information. I can rely on all of these people. I've been working with all of them now for at least 2 or 3 years, and some of them, like John Barrick, 6, 7, 8 years. Oliver Bleckner I work with, who runs business development, I worked with prior to Jushi. So they've come and joined the group because I was at the company, because they have experience with me and they trusted that we'd be able to get this done together. So it's a tremendous team, and I can't emphasize that enough.
I think it's so great to talk to management. I talk to a lot of management, and the ones that are so excited and they can't talk fast enough because of how excited they are and how much they want to share about the company. And then you're talking to management who speaks a lot in sound bites or in headlines or in shiny packaged sentences, but not really saying a whole lot. So this is just to the viewers. This is not for you, Jen. This is just to the viewers that soak up what you're saying, because not all management speaks like this. And this is part of what I'm really trying to do with this series, is talk to management, and you can really suss out so much about a company beyond the financials, how exciting the passion that they're bringing, and how much they're sharing about the company, because that means that you're thinking about it, and that means that you're also expressing it, which means it's truth. So you say that you're not part of IR, but I would say that it's really authentic IR, this what I think of this as.
Thank you very much.
I just speak from the heart. So I wanted to end with asking where you got Jushi, the name, from. You were talking about before the importance of names.
Yeah, I want to get back to that. Remind me, but there's one other aspect, and it will be the bridge from your audience to getting to know Jushi. So
Okay.
we have a creative director who I should have named Andres Newman. He's built this, and he's creative. He's most of the most creative people I've ever got to know this well. And he runs marketing, the brands, and all that, and it's very, very data driven. The numbers people in his group are as good as the people who came out of the top Wall Street institutions in our business development and other numbers oriented group, or Kim's group, in the she's a CFO. And so Dre has built a website and an information apps where we have the best ordering menu. I mean, our online sales are tremendous. All of our industry partners like Jane Technologies and Headset and Spring Big, which is the customer loyalty program, think we're like the beta customer, because they have open APIs, right? And we can get in and create a front end to their systems, and we help them develop their systems so they work better for the industry and for us. So people are copying us now. So we have this tremendous system driven out of creative for branding and really online ordering, which is kind of like our version of being an Amazon, right? You come on and you just pick it up, We can't, in some markets like Virginia, we can deliver in California, so we will do that as we're developing the company. We're very much headed in that direction, but it's limited by the regulatory. Not many states allow that. So that's great, but what the upside to the investor and your audience for that is our website is tremendous. So if they just go onto that, the Jushi website, they'll understand where the name came from as well. I hope, I think it's there. And you'll go in there and there's a tremendous amount of information about the company. On the investor website, you can see our stores and pictures and videos and huge amount of what we call content. We're constantly creating content. Why wouldn't you create videos about your customer? With TikTok and Instagram videos, I mean, it's all the new generation wants video. So we do that. We create the video. So we're a 2020 2030 company, not trying to be 2000 or 1900 company. So it's really driven for the younger and the millennials who are getting a little bit older, and so they can really kind of understand our business. And then in terms of Jushi, so we had a lot of pressure. I started a number of companies, and it's very hard to name a company because what happens is everybody has the good names. And so what I noticed in the industry generally is I didn't like any of the names because I thought as an investor, I knew them all. And I said, none of these have any meaning, and it, I'm not going to sit here and disparage any companies in particular. Some are better than others, but I thought there wasn't a great amount of thought put into these things. And there wasn't a great amount of thought put in ours either, to be quite honest. But I happened to get lucky. I went onto the internet and I started searching medical cannabis and just made some searches. And all of a sudden, I came across the Jushi Kingdom. The first known use of medical cannabis was in the Jushi Kingdom, which is thousands of years ago. It's in China, as you would expect. And there was a shaman, and he was buried in a tomb. And I don't know if you've ever been to a tomb in China. I have, but they'll excavate these huge tombs thousands of years ago, and they'll have all statues around them in certain cases who were warriors facing their enemies, and the really cool stuff, right? And this Jushi shaman had cannabis all around him in urns. And apparently, as the legend goes, you open up the urn and it was beautifully smelling a product. And so it preserved. And so I just thought that was a really cool name. And amazingly, it's persevered. I don't think there was a lot of people who loved it as much as I did. But I think we're getting a lot of compliments on it now, and people love the meaning.
Yeah, that's awesome. That's really awesome. The closest I got to a tomb was in Egypt, and I would have loved to have seen like a smoking session set up there with the mummies.
Exactly. That would be a good place. That would be a good place to have a session.
That's awesome. Jim, this was a pleasure. It was really great talking to you. Great catching up with Jushi. We had Kim on the Cannabis Investing podcast, and she is as smart as you say. It's great to have you on, and great to have, I would love to have you back on at some point down the road. This was a fantastic talk. So thank you so much for not just sharing your time, but your energy. So thank you.
Right. Thanks a lot, Rena.